Hey everyone, Sean Dawson here from Julie Harris Realty with your monthly market update for August 2022. Now I must apologise for not having an update out there in the previous month of July. It's been quite a busy period in real estate for a lot of people, including myself, and unfortunately I just couldn't find the time. But this month I've got quite a bit to update on, so why don't you grab a box of popcorn, sit back and relax, and take 10 minutes with me just to talk a bit about what's happening in real estate at the moment. So I'll get the normal stuff out of the way first. Of course, I am going to talk about the daily or the monthly indices. Now, I think everyone at the moment is paying attention to the media and what's happening with the RBA and things like that, and how that is affecting the Brisbane real estate market. Now, as most of us should be aware at this point, the Sydney and Melbourne markets have been on a decline now for quite a few months. I think it's about 4 or 5 months at this point in a row. And up until these newly indices released by Corelogic this week, Brisbane had been on the up and up consistently throughout the beginning of this year. Now, for the first time since I think the third quarter of 2020, Brisbane has seen a decline in the all categories section of real estate. So that means freehold houses and units, townhouses. As per these figures, I'll read them out right now. So all dwellings category for real estate in Brisbane has seen a decline month on month of 0.8%. Obviously under 1%, which is good news, but still a decline nonetheless. When you consider year on year, so the difference is still between July 2021 and July 2022, the values are still up 22.1%, which is shouldn't be of surprise, I suppose, because considering what we've seen in the last couple of years with real estate. But we're finally now seeing a slight decline in the greater Brisbane property market. Now this includes, of course, Brisbane City Council itself, but also Logan, Ipswich, the Moreton region, and the Redlands region. Of course, that doesn't actually include the Gold Coast region as well. The Gold Coast region has seen a decline of 0.9% in that same amount of time. Now, all of that decline can be attributed to freehold houses. Now, as I talk about every month, freehold houses being generally the higher value category always see the strongest in terms of growth, and what we're seeing now is they see the most in terms of decline as well. So freehold houses month on month decline for between June this year and July this year in Brisbane was 1.1%. Now, a pretty considerable amount of decline. If you were to assume that decline was going to continue for every month, for example, for a year, you'd be seeing more than 12% decline. You'd be seeing, 13.1%, wouldn't you? So I don't necessarily believe that that's going to happen, but a 1% decline in a month is, I suppose, considerable, but also too probably not a surprise when you consider everything that's going on at the moment. But in good news, for that same period, month on month, with units, so townhouses and units, apartments, all those kind of things, that market is still on the up. So an increase of 0.7% between June and July 2021. Now, units and townhouses, of course, always do follow a little bit behind freehold houses, and it is likely that market will probably see a turn or a decline next month or maybe the month after. We are experiencing a decline in interest from buyers in a couple suburbs that we operate in, but then also there's a handful of suburbs that we also operate in that are seeing increases still. And this applies actually to freehold houses and to units and townhouses. So I suppose something to be considering if you are hoping to take advantage of the market and get your property on the market before the end of this year. Now or within the next few months might very well be the time to consider if you want to achieve the best that you can. It's not all doom and gloom though, I believe. When you consider the fact that all of these properties that we're speaking about are still selling for a considerable amount more than they were a year ago, 18 months ago, 2 years ago, a slight decline now isn't really that serious. Now, of course, we can assume that most of that decline is attributed to general buyer confidence decline, almost entirely because of the interest rate rises. So yesterday we did see another interest rate rise of 0.5% from the RBA. That's the fourth interest rate rise in a row this year, and the third in a row being at 0.5%. Takes us to the highest base rate that we've had since 2016, and certainly new buyer confidence has slightly been eroded because of that. What I'm seeing out there at the moment most of the time is buyers who are just worried about the value of the property that they may purchase now decreasing significantly over the next 6 to 12 months. Now, there are no crystal balls to tell us whether or not that will happen. Keep in mind, 2 years ago at the beginning of the COVID pandemic, a lot of people, so industry pundits, economists, things like that, were talking about how the market was sure to decline by 20% or more with this pandemic. And here we are, more than 25% later in the positive, so essentially a 45% difference from what they were saying. And now we're starting to see some declines. So I think it's very hard for anyone to really predict what's going to happen. Surely there will be declines, but I don't think they will be as severe as what a lot of people are predicting. Reasons for that. So if you're scrolling through your Facebook feed, and I know I am, and I'm seeing a lot of stuff on a daily basis talking about all the doom and gloom related to real estate, Australian real estate in particular, if you pay attention to these reports, and this used to actually apply when the market was on the up 2.5, 3 years ago as well, but if you pay attention to these reports, in most instances they are talking about the Australian industry, the Australian market in general. Now, it's very important to be aware of the fact that the markets in Victoria and New South Wales alone account for more than 50% of the Australian real estate market as a whole. The rest of that obviously being encompassed by the remaining states and territories. Now, by nature, it's a numbers game. If those reports are talking wholly about the entire market, the vast majority of those either increases in good markets and decreases in softer markets are going to be absorbed mostly by those bigger markets, i.e. Sydney and Melbourne. Sydney in particular, of course, the values in Sydney are obviously quite spectacular and quite silly, if you ask me, and probably ripe to come down to a more reasonable level. I also think that Brisbane and the greater southeast Queensland region is probably more poised for at least insulation from these market declines to an extent for the various reasons that we all know about. So obviously Queensland still has the strongest and the highest interstate net migration out of all of the states in the country for a couple of reasons. I think it's partially to do with the fact that we have, obviously a great lifestyle, work balance here, good climate, generally desirable to a lot of people because of those factors. I think also too, though we aren't seeing any kind of influx of buyers attributed to this, but the Olympics may have something to contribute towards that growth in the next few years. It certainly hasn't started yet, and the Olympics are still 10 years away, but it's important to note that the Sydney Olympics did help that city quite a lot in terms of interest in that city and that state, so it's likely to happen here as well. And I just think that in general, people like this state because it's coastal, because you can now essentially work remotely. You don't need to work from your office, and we have a great climate here, and we have relatively, our real estate market is still relatively affordable compared to big markets like Sydney and Melbourne. So though we are likely to see declines in certain markets, I don't think that it's going to be anywhere near as extreme as what some of the reports suggest, for that very fact that those two markets obviously encompass quite a lot more of the whole market than just Brisbane does. One little tip that I often find works for me, and I actually believe is actually true. If you are confused by a report that you're reading, whether it be any of the big news headlines on Facebook or wherever you're seeing your news, unless those reports are referencing specifically Southeast Queensland or Brisbane or the Gold Coast or whatever, they're likely not talking about this market. They're talking about the whole market. And most of the time, if you actually pay attention, when you read these reports, they name drop specifically Melbourne and Sydney, not necessarily Brisbane or Adelaide or Perth or any other capital market for that matter. In relation to the declines, of course, it's important to be aware that Sydney has seen a month-on-month decline of 2.2%. Melbourne has seen a month-on-month decline of 1.5%, but then you've still got increases in a couple of those smaller markets than Brisbane. So Adelaide's still on the way up, Perth is still on the way up, Darwin is still on the way up. Likely, being smaller markets than us, they probably will start to see declines shortly, but they haven't yet. So that's my opinion on what's happening in this market here in Brisbane at the moment. I'm sure it's. I'm hoping that most people are paying attention to this video so that they can keep up to date with what's happening when I send these videos out. I'm still hoping to keep that monthly schedule. It's just been a little bit tricky too the last few weeks. Very quickly, I wanted to talk about a couple of properties that we've got on the go or that we've recently sold. So 85 Pond Street in Mount Gravatt East. Now, this is a property that myself and my colleague Tim have listed recently. It is a lovely post-war character home, renovated very well, 4 bedrooms, parking for 2 cars and a single bathroom. Most of the house itself renovated quite recently, sitting on 698 square metres in a very desirable street in a very popular part of the suburb. This property now is on the market at offers in the 900,000s. We do believe that there's probably range for it to achieve a sale price anywhere within that kind of price guide. It's very hard to tell at the moment with the way the market's going, but if you're interested in a perfect starter family home with 4 bedrooms, we are having regular open homes this week and next. You can contact me if you would like to come along. We've got realistic sellers who are really keen to find the new owner for the home. The next one, now this is a property that I've got coming up very soon. Well, I've got 2 properties coming up very soon. So the first one is 21 Ginkgo Crescent in Regent's Park. Now, following the recent successful sale of 27 Indica Crescent in Regent's Park, I've listed 21 Ginkgo. Now, this is a very typical Regent's Park home. It's a 4 bedroom, single bathroom, 2 car, brick facade bungalow house in, I would say, kind of the western part of the suburb, so the newer part. Just shy 700 square metre block. Very green, very family orientated suburb, very close to some main roads, some arterial roads, very close to all of the main shopping centres out that side of town, so Browns Plains, Grand Plaza and all of the surrounding shops, very close to some good schools, and very easily accessible via a couple of different arterial roads and motorways coming from Brisbane or Ipswich or the Gold Coast. Now, this property will be likely hitting the market in the next couple of weeks. We've just got a couple of things to prepare it for sale. And if you are interested and you'd like a look before we hit the market, please give me a call or shoot me a text ASAP. I don't expect this one to last very long. The next one we've got coming up shortly is, now I won't give away too much information about this yet because we've still got a few things to go with this, but I'll be shortly listing a very typical but very beautiful and well presented 4-bedroom home in the Mossvale Estate in Wakerley. Now, this is a very well-built, typical Mirvac bungalow home on 600 square metre block, multiple living areas, lots of kind of like outdoor area in the yard, nice lovely big master with ensuite, 2-car parking, and just a very well-kept, beautiful home. This should probably hit the market in the next month. Again, I would encourage people to look at comparable sales in that area to get an idea of probably where we'll be going with it. But again, in this market, it is a bit tricky to get an idea on the actual price. But if you want to have a look at this place, of course, contact me beforehand and we can probably arrange to have you through for a private inspection. I don't expect this house to last very long either. That market in particular in Wakerley, in that estate in Wakerley, is very, very popular at the moment. Very close to the city. Very close to the Bayside. You can still arguably get a beautiful home in a green suburb in a very good primary school catchment, Gumdale State School, and all within like almost walking distance to some very popular Bayside private high schools, including the Moreton Bay Boys and Girls Colleges, Iona College, and a few others. So, if you would like to learn more about that property, please give me a call as well. I'm more than happy to potentially arrange an inspection for you in the next couple of weeks. I think I might leave it at that. It's important to be aware that I don't believe that the market is going to decline to the degree that other markets have already, but it's also important to be aware that it will probably decline to some extent. Interest rate rises have dented a lot of sentiment or confidence from the buyers that I'm meeting in all kinds of markets, whether it's townhouses or units or houses in Mount Gravatt East or in Regent's Park or in Kingston for that matter. People's limits have been changed and people are worried. So if you want to get the best bang for your buck, my advice would be to consider getting your property on the market very shortly. We're moving into a new cycle now and it might be another 5 to 10 years before you can achieve a strong number or a stronger number. If you'd like to talk more about that, I'm more than happy to break down the particulars with the suburb that you're in. I have obviously access to a lot of information where I can really figure out what's going on and how it might affect your property. Things that count are listing volumes, time on market, obviously comparable recent sales. And it's one thing I might quickly say is that in the last month, so in July, a lot of sales, so achieved, executed, settled sales, slowed down a lot compared to prior months. It looks like in most of the suburbs that I've researched recently, the peak for sales volume, so settled properties, seemed to be in March and April, following most likely 30 to 45 day settlement periods. And then it declined a little bit in May, a little bit further in June, and then July, a lot of those suburbs, the actual settled figures were quite low. A little bit of that can be attributed to lower listing volumes, which has occurred in a couple of places, but also too, you've probably got now properties that are taking longer to sell because of the way that sentiment has changed. And I can break down those figures for every single suburb in Queensland if you want me to. So if you'd like to have a chat, you'd like some information on what's happening in the suburb that you have a property in, please contact me ASAP. I'm more than happy to help. Thank you for watching this long video, and have a great month.